that like meme coins and stuff, Pudgy Penguins. Pudgy Penguins has been inside of the forefront of the meme coin market for a long time. And Pudgy Penguins has actually, like, if you look at the trending, it's usually on the trending. Usually. So yeah, there it is. Pudgy Penguins is always on the trending page, always. So I think that's one that we can't leave out. We gotta pay homage to Pudgy Penguins, and we gotta do this technical analysis. So let's break it down. People always ask me about Pudgy Penguins inside of let me type in PENGU here in my comments. Just keep the scam penguin. What? Never learn AT safe moon. Oh, these are all the ones I didn't respond to because they were haters. Yeah. Do you think PENGU will go down to 0.003 before the rally? I told this guy it's possible. Wherever it's at when Bitcoin reaches 50K will probably be it. And this guy says, PENGU, please, on the PENGU chart, you failed to look at the weekly chart. RSI bottomed and curling up. So he said, I failed to look at the weekly chart, RSI bottoming and curling up. And he said this 2 months ago. Okay, that was 2 months ago. That was really old. Let's see what homeboy is talking about. RSI failed. But see, the reason why you can't look at the weekly chart for these meme coins, it hasn't been out long enough. It's still curling up, but it's still dumping as it's curling up. That's why you cannot pay attention to the weekly chart for short-term stuff, and you can't pay attention to the weekly chart for meme coins that are new projects, because when you do, you'll probably get burned. That guy probably got burned. So that's why I come over here to the 4-hour chart, because I'm looking at things from a 4-hour perspective, because he said that 2 months ago. So that would be around December 23rd, right? So if that guy bought in 2 months ago, December 23rd, actually, I want to know the exact day. Like, I can't drop it now. I can't drop it, right? And I don't think I'm gonna actually find the exact day of it. So it is what it is. But I can't drop that. I can't drop it. But anyways, if he bought in 2 months ago, he bought in around this area, right? Probably bought in around. Let's give him the benefit of the doubt. Let's say he bought in around this area. That means that he is currently down 32%. This is why I say 4-hour chart will be your best friend on meme coins. You don't want to look too long term for meme coins. Like, these things change in a matter of seconds. And when Bitcoin goes down, they go down twice as much and sometimes thrice as much, right? So yeah, massive dumping. Let's talk about how I said Pudgy Penguins will hit 0.005 and how I said this like 3 to 4 months ago. All right. And you guys are going to start seeing a pattern here. I know we don't got many people watching, and I'm going to clip this up, put it on YouTube. I'm going to get more followers here on Kick. But you know, you're going to start seeing a pattern here of me predicting things and them coming true. And you're going to see it over and over again. And it's not going to stop. I'm going to continue to get things right. And I'm going to continue to be one of the best people with technical analysis inside of the crypto community. What is this? November 17th, 0.005 through 0.008. November 5th, 0.005 through 0.008. I've been preaching this. I have been preaching this. The second we went into this bear market, I was like, nope, no longer bullish. We are in a bear market, no longer bullish, right? I was bullish the whole time, but the second I seen that bear market confirmation, nah, it's dumping 0.005. So as you can see here, I predicted that. I made $1.64 off of that. Okay, YouTube, I made $1.64. Not enough money. Pay me more. All right. 0.005 though. November 5th. Where were we at in November 5th? Let's see. So November 5th, Marcellus told everyone what was going to happen and what their prophecy would be. Marcellus, the great Marcellus, said we were inside of a rising wedge. Thou shall not buy within a rising wedge. Thou shall short within a rising wedge. That's what Marcellus said, the Great. Marcellus the Great. Because thou may seeth the rising wedge as a bear flag. Because a bear flag is also a bearish pattern. Rising wedge, also a bearish pattern. So, what happened? We dumped massively. November 5th, I mentioned that. And where were we in November 5th? Actually, this was before the rising wedge. We were in the falling wedge. And this is how good I am. Look, I'm not even trying to toot my own horn. This is how good I am. Falling wedges are bullish. But I was like, nope, this falling wedge is not going to be bullish. Why did I say this falling wedge is not going to be bullish? Because I'm not only using chart patterns and wedge patterns, I'm also using technical indicators, and I'm also using price action, and I'm also using expertise. All of that mixed together makes me the GOAT, right? Anyways, let me stop bragging. November 5th though. November 5th, I said we're gonna come down to 0.005. Really, it was like a hunch actually, if you think about it. Because like we were looking bullish, but I was like, nah, we're not gonna be bullish. It was a hunch. I'm not gonna lie, it was a hunch. Nothing was showing that we were, but Bitcoin actually was showing it. I was actually going off of Bitcoin's analysis over Pudgy Penguins at that time. So if you look at this, November 5th, let's do the daily chart and let's take off everything. Let's take off everything just like we would do a baddie. All right. So when you look at November 5th, this was the head and shoulders. Yes. Okay, now I see. This is why I did it. This head and shoulders pattern right here. After we did that, I was like, nah, we're going to continue to dump. And then we were right here about to relief rally. And I was like, nope, it's going to continue to dump. It's going to continue to dump. I seen it. And I was like, look, November 5th, it's going to continue to dump. The percent R trend exhaustion has to come all the way down. And I remember this vividly now. So that's exactly what happened, and it actually did exactly what I thought it would, and it continued to dump from there. So this is why you have to use more than just your patterns, right? You have to use indicators as well. You have to use everything that you have in your tool belt, in your arsenal. Let's go ahead and play this. Let's get it. Let's get it. I'm gonna play this video for you guys. All right. Oh, let me turn that down. Yeah, I made that beat too.
What's going on, everyone? Today we have to talk about Pudgy Penguins because we had ended up bottoming out here at 8 or at 0.0.
So yeah, at this point, I was inside of Thailand at this point. I'm no longer in Thailand. I'm not gonna say what country I'm in now. But
I want to talk about where I think Pudgy Penguins is about to go next because yes, we just now hit that level. But for some reason, I feel like this might not be the end of the dump. Anyways, stick around to the end of the video. Remember, I'm not a financial advisor, none of this financial advice. Go ahead and become a member of the channel, guys. It's only $9.99 per month. I'll go over any stock or crypto that you want me to go over next, as long as it's not some type of low cap scam coin. Just go ahead and become a member. Leave a comment on any one of my videos. Let me know what you want me to go over, and I'll go over it. But you have to be a member. But anyways, let's go over this. So as you can see, Pudgy Penguins right now currently at a 3.8% up in the last 24 hours. Only, well, no, that's still good. 361.
Let's skip.
I don't think 0.013 is the bottom. I don't think that. I actually have been mentioning this all along. So we're going to go from the lowest time frames all the way up, right? But we're not going to go too low. We're going to go from the 30-minute all the way up. So the first thing that I'm kind of noticing here on the 30-minute time frame, we are hitting some resistance right now. And this is a minor resistance area. As you can see right here, it was used as support, very strong support, and not very strong because it actually broke down right there. But it was used as support, and now it's used as resistance. We got rejected once here trying to recover. Now we could be getting rejected here. But look, if we break out right here, this is going to make it more easier for us to become bullish and go back up to 0.017. But if we get rejected right here, this is not too good for us. And also, if you look over here on the percent R trend exhaustion, you can see the short-term trend is completely, overextended to the upside, but it could stay overbought for a while. And the long-term trend is kind of catching up here. So that is pretty interesting to see here. And then we can come over here to the 1 hour chart as well. The MACD on the 1 hour chart, you can see lots of buying volume here. So that's always pretty good. And then you can see the percent R trend exhaustion showing, again, the short-term trend being overextended to the upside and the long-term trend kind of slowing down a little bit. So my thing is, like, what if the long-term trend kind of, stops halfway and then the short-term trend comes down? Usually whenever we see something like this, when the short-term trend outperforms the long-term trend, on the percent R trend exhaustion, it's usually almost like a, it's a sign that like we're about to pull back pretty much. Like you can see it here where the short-term trend breaks above the long-term trend. And then you can see the long-term trend going down from there. And if you actually pull it up and look at what it was doing around the 29th of August or October, you can see it was a pretty big drop right there actually. And what did we see? We've seen that the long-term trend overdid the short-term trend. Now that's not the most perfect example, but that's pretty much how it works with the percent R trend exhaustion. We don't want to see the long-term trend or the short-term trend outperform the long-term trend. Every time it happens, it's usually a pullback. So there's a possibility that we could pull back even further. So just keep that in mind. But there's always the possibility that it could be the end, right? There's always a possibility that this could be the end of the dump. But me personally, I don't believe it's the end. We're having the same problem here on Bitcoin. The short-term trend is far outpacing the long-term trend. Long-term trend is moving slow, kind of like how it did before. Short-term trend outpaced it. The long-term trend stayed.
So if you hear what I said there, I said the short-term trend on the percent R trend exhaustion is far exceeding the long-term trend. And whenever you see that, you typically have a massive, massive drop. That's exactly what happened inside of Bitcoin. And that's exactly what we just now seen in Pudgy Penguins. When you have the short-term trend, which is the white line, far exceeding the long-term trend, which is the blue line, the short-term trend has to come back down eventually to that long-term trend if the long-term trend does not go up and follow the short-term trend. So when you see that happening, you know you're going to get a dump in the market. That's exactly how I knew we are going to have a dump inside of Pudgy Penguins. And that's exactly how I usually know whenever we're going to have a dump in other things, whenever the chart patterns don't work. So if the chart patterns don't work, then I know the other things will work. So that is what's going on. That's what I did right there. The reason why I went bearish on this bullish pattern was because of Bitcoin. So, everything was like, maybe it can stay bullish for Pudgy Penguins. Right around this time is when I made that video. We dumped and we kept going down, like I mentioned. But yeah. And then, like I was saying, micro and macro support resistance areas. Your macro supports and your macro resistance areas are going to be these little white lines that I put here. These aren't indicators. This is just what I put here, right? And then your macros are going to be your Fibonacci's. So your macros are your Fibonacci's. Like this is a macro area. It's your Fibonacci. This is your macro area. You take it from the swing low to the swing high, or from the swing high down to the swing low. So your Fibonacci's are your macros from swing high down to swing low. And then all these little lines here, these white lines, I created them myself because these are my micro support and resistance areas that I use for day trading. The micros are areas where you've had massive support and resistance outside of your macros. So where if you had support and resistance outside of your macros, those are areas that you want to mark as your micro support and resistance, because you will hit those later on in due time, right? We hit it here. I knew we were going to hit it again, right? We hit the support back down here. I knew we were going to hit it again. We hit the support here. I knew we were going to hit it again. It's a micro area, right? It's a micro support / resistance area. And a lot of people might not mention this. They might call it something else. I just call it micro. Like, come on now. We don't gotta call it, whatever everyone else is calling. We can call it whatever we want as long as we know what we're looking at, right? So I just call it micro support, micro resistance. Other people might have different names for them. I really don't care what they have for it, right? So we hit resistance there, came back, met it as support. Resistance then becomes support. Support then becomes resistance. Yada yada yada. And yeah, that's what we've seen there. So that's how I knew what was going to happen here inside of Pudgy Penguins. And the next area is going to be our all-time low, where we actually hit inside of Pudgy Penguins at 0.004, technically 0.0038. So we're going to see 0.0038, and I predict Pudgy Penguins will add another 0 on to the end of it. So it will be 0.0009 eventually in this bear market. That's how I think it's going to be. I believe we're going to be in a bear market to the end of 2026. It's just going to be one of those years. We're just going to have to put our head down. The bull market of the previous bull market started January 1st, 2023. So I think it's going to be similar this time around.